You were listening to ChartingWealth.com for Tuesday, the 11th of April, 2017. We'll jump right into these charts. Everything up for the day. We're going to jump into the S&P 500 as represented by SPY. It was up just barely 0.06%. Of course, we had our weekly vertical crossover about, 3.5 or so weeks ago, back on right there at the end of the month on the 31st of March. And when we look at our two-day chart, we can see how the market has been sliding sideways since that weekly vertical crossover. If we zoom into that a little bit and take a look at the 2-hour chart, of course, what do we see? Well, our jumping in point right around the time of the weekly vertical crossover, somewhere in the 136 range, of course. We've been down as low as 134.28 or so, 134.40, where we closed out throughout the course of the day. 135.34 is where we ended the day. So again, market's been sliding sideways, crossed over on that 2-hour chart going down back on the 6th, and of course has just continued to move in a downward direction again, following that weekly vertical crossover. So again, we had a good jumping in point. We'll continue to watch and pay attention as to where things are. I guess we're down about $1 now. But again, we'll continue to watch. The market is trying its best to roll over. Again, we have that weekly chart that has rolled over for us. The 2-week chart, or the 2-day chart rather, rolled over way back on the 14th of March, Tuesday the 14th. So again, it always moves first, then the weekly, and then we'll just continue to watch as the market tries to hold where it is. But again, the momentum, as we can clearly see from our charts, both on our 2-day and our weekly chart, is down. So we'll continue to watch how that shapes up. Different thing going on with the Qs, which is, of course, the NASDAQ 100. Still in a confirmed up move all the way back there at the beginning of January on the weekly chart. The 2-day chart rotated over going down back on the 10th of March. And we've really, again, we saw the NASDAQ continue to build. Then it sort of dropped off for a few days there toward the end of March, and then knocked up again. So we still don't have a crossover going down. The market's tending, as it does, to continue moving in the direction of the largest chart, which is the weekly. And until that rolls over, we are we're not looking at any trades until we have confirmation of a rollover on the NASDAQ 100. And it is getting long in the tooth. And we can see that it's already getting ready to touch that top Bollinger Band. We can see from our Bollinger Bands, which are volatility bands, that volatility with this sideways slide has really reduced. But there's lots of movement for a down move. So we'll continue to monitor. That's where we are on the Qs. Now let's jump over to TLT, up 0.46% for the day. Of course, TLT, we had our weekly vertical crossover there at the beginning of February. Market went up for a while, down, up again, dropped off considerably until it bottomed out on the 16th. Again, never losing its weekly vertical crossover. Then it started to shoot up again. And of course, we had that 2-day chart crossover on the 22nd of March. And then if we look at our 2-hour chart, we can see that the market has slidden sideways since then, quite a ways, up and down, up and down. But again, because we have that weekly vertical crossover going up, we are still in that confirmed up move, followed by that 2-day chart rotating over. And of course, things are moving up. We are toward the bottom of the Bollinger Bands. We've still got lots of room for up movement. Again, like we've talked about, we see this dichotomy. We see that bonds and gold are trying to settle out, bottoming around 117 for bonds and moving up, and we see the stocks rolling over. Why are these inversely related? Because money tends to flee from stocks when they're not doing well into bonds and gold. And the opposite is also true when the market's doing really well, the stock market. Bonds tend to go down, gold tends to go down because money tends to flow into the market. So we'll keep watching, and we should see all of this occur about the same time. As bonds continue to bound up, stocks should be rolling over and going down. So we're currently, ever since our buy-in point, we are still there on our TLT trade. Now, let's take a look at gold. What is gold doing? Gold was up. Oh, well, gold was actually even for the day. Looked like it was going to be up, and then it sort of evened out. On our weekly chart, of course, we had our weekly vertical crossover for the week ending the 27th of January. Gold up for quite a while, many weeks, then dropped off for 2 weeks, and then started heading up again once that 2-day chart crossed over. And we've seen gold moving up on the weekly chart since the 24th of March. And let's take a look at the 2-day chart so you can see that a little bit better on gold. And again, when that crossover occurred on Friday the 24th, gold, of course, bounded up, slid sideways for a while, and it started moving up again. What are we waiting for, of course, on gold? We're waiting for that 4-hour chart to cross over going up, and it hasn't done it yet. We've talked over again about how prescient that 4-hour chart is for us. It is such a good, you could just trade on that 4-hour chart alone. It works time and time again ever since it started working back at the beginning of the year, stopped working toward the end of the year. So continue to watch. And again, once we have the 4-hour chart rotate over going up in the same direction, that is up as the 2-day and the weekly, we will be in good shape on gold. Still above the weekly trend line, so still moving in the right direction. We'll continue to keep an eye on that. Hope that you enjoyed the comprehensive review and forecast we prepared for you over the weekend. If you hadn't listened to that yet, please jump into it, listen to it. It is available at the website. And of course, if you want to receive our weekly market worksheet, our daily market worksheet, our How to Read a Stock Chart video, and the layout that we use at freestockcharts.com, all that's available for you for free. If you do one thing, you go to chartingwealth.com, the website, and you sign up for the newsletter. We don't sell our list. We don't spam anybody. We simply want to help you figure out how to read these stock charts, the most important thing you need to know so that you're able to master the market. Because when you can read a stock chart, my friends, it's like having the paper a day, 2 days, a week early. We are trend followers. We are not forecasters. We look for trends like these weekly vertical crossovers that we talk about so much. Because when that big wave changes, it's your opportunity to jump in and ride it, not forecast it, but ride what's happening. You see us talk about it every day here. And it tends to work week in and week out. Train with us. We're not a stock calling service. We're an education firm. We don't give you market advice. We want you to practice virtual trades with us, and we'll be there with you every step of the way. God bless. Take care so much from chartingwealth.com.